Morning, everybody. How are we all doing? Morning in, Peter, Amy, Christian, JC, Virginia, Danny. How are we doing? All good this fine Thursday morning? Morning, Kennedy. Big moves yesterday again, weren't there? Huge moves on the indices again. All getting a bit weird and volatile. Last day of the month today. So we may well get some more big movements today as they settle their books for November. See what happens. Morning, Gregors, Peter, Yotko. So today we've got the yearly estimate for CPI coming out. This is a very kind of woolly figure, basically. It's just the estimate based on what we've had. So there's not a lot of market attention paid to it, to be honest, which is why it's orange news. But it's just basically saying where we think everything is going to go, which is what they obviously use to get these figures. So that's what we got coming out this morning. There's no other news this morning, so there's nothing really to move the market during the London session. The main potential, obviously, mover today is going to be the CAD GDP, but for oil and for the CAD as well, we've got the OPEC meetings all day. OPEC are really struggling to get consensus with all the oil-producing countries as to production levels and all sorts of stuff, which is why oil is all over the place at the moment. So I'm hopeful that we might get some stability out of oil, which will help the Canadian dollar be less erratic. But we'll see what happens with that. Oil at the moment is kind of, as you can see, it's been all over the place. We're expecting this thing to rally, and it's just it's just a wild thing at the minute. It was forecast to be over $100 a barrel by Christmas. We're sitting at 75, so there is no way, 77, there's no way it's going up there, is there? So we'll see what happens with that. But that's all day today, so there could be things being drip fed out at any time today about that will move oil and potentially the Canadian dollar and the US dollar. GDP for the CAD at 130, along with PCE and unemployment claims. So all the news today is pre-New York Open. Then we got PMIs this afternoon for the Chicago PMIs, which don't really do anything in home sales. So it's all pre-market news ahead of New York Open today. And then tomorrow we've got the unemployment rate for the CAD, and we've also got the PMIs. Now, we've got two additional scheduled talks by Powell tomorrow as well. So these, we've had very mixed messages from the Fed this week. We've had them saying they're going to decrease rates, they're going to increase rates, they're going to do all sorts of stuff. So I'm hoping that Powell will give a little bit of clarity as to forward guidance tomorrow in one of these. Depends whether or not he gets asked questions. So that could actually be quite a kicker tomorrow evening. And this is before the market closes as well tomorrow. So we'll see what happens there. But so mixed news day today. The GDP, the main thing is the unemployment claims. That's what's mainly going to move the market today. We've got 5 minutes to the open. Overnight news. Here we go. OPEC's already started. Additional oil output cut discussions range from 1 to 2 million barrels per day. So that's already kicking off. Rate cut in April for the euro. Pricing in. There we go. Bearish euro. We kind of knew there was going to be some euro bearishness coming in. So that seems to have kick-started that. There we go. Nice big sell-off on the euro there. A little bit of strength coming through on the US dollar as well. More cuts to oil output, which would be bullish price. Basically, OPEC want to get the price up. They keep talking about oil cuts, but they don't want to do that. Saudis mainly. So we'll see what happens with that. But other overnight news, just scanning through because I've been at the gym this morning, so I haven't looked through. Retail is down for Japan. Nothing else exciting there. Right. Okay, so obviously overnight there's not been a lot of movement. No ADRs. We've got weeklies. So any of these which are really extended still, potential opportunities to get into. Aussie, New Zealand being one of them, but that was one day that made that basically weekly range hit. So nothing overnight to look at. RSIs, the main thing is the Euro Swiss. This Swiss franc, oh my God, not again. No, this is Euro dropping. I was going to say, this Swiss franc is on a mission at the moment. So that Euro Swiss really, really extended now. After that news this morning, I'd be wary about longing that Euro Swiss. Potentially, if we are suddenly now talking about rate cuts in April ahead of November, which was the original forecast from the ECB, and then potentially bringing it forward, that's a big bring forward. So they're expecting those interest rates to continue to drop a lot faster. This could be bullish again for the DAX today. DAX had a massive day yesterday. So interest rates coming down at a very, very fast rate. Target is 2. Yeah, they're very close. So it may be that they bring those rates down faster than expected, which is going to drop that euro quick. Unemployment is through the roof as well. So they've got every reason to drop that. So we could have a negative euro move, which continues. I've taken a buy on that yesterday because that is an H1 RSI extension. So it'll be taking a second on that today by the looks of things. That'll be a quick one, won't it? So that's very extended. We'll look at those in a minute. Yesterday, I took a aggressive drawdown control position on CAD Swiss here. So right at the end of the session yesterday, we put in this sort of outside bar, followed by a bullish candle, and I just got into a long there with an aggressive drawdown control position. Hope being that we actually push back up at least into these propulsion gaps today. So I'm hoping that we get a nice reversal on the hourly today that starts some kind of move back up into this area on the CAD Swiss. I'm hoping that, first of all, good news, euro, that will bring the Swiss down, which will help. But secondly, I'm hoping that OPEC today gets some agreements on oil and it rallies oil, and that will rally the CAD. So I've taken an aggressive on this today because we've got fundamentals that could well drive this today beyond ADR. So same with the US dollar Swiss. I've taken an aggressive on that one as well. I had a pending order which has just triggered on that. We've had a reverse alert on that one this morning. So I've just taken the retest on that there. So that is also an aggressive drawdown control position. I'm not in too much trouble on it at the moment. It's in 2.7, which isn't good, but it's not hideous. So I've decided to do an aggressive on it because I've got a lot of Swiss franc exposure long, and the Swissie's nuts at the minute. So I've got a lot of Swiss franc exposure short, sorry. Right, FX. DAX, very, very tight range pre-market. Very tight range pre-market. Blimey. So yesterday on the DAX, we had that massive rally. This just went screaming to the upside. Lovely day yesterday. Made good money yesterday on all 3 indices. So exited on that. That was well over ADR. It was 150 ADR or so. And then got out on an aggressive pullback. So looking at where we're potentially going today, just gone long on the DAX. This thing's off again. If this euro is negative, we should be seeing a rally today on the DAX. So thing that concerns me about this DAX is it is so unbelievably extended. We've not had a pullback on this thing since the end of, we just haven't had a pullback on this thing all month, all of November. So this is 27th of October. We gapped up. We haven't stopped. And we had that massive rally put in yesterday. So, yeah, this thing is just on fire at the moment. You can't pick an upside on it. There's nothing to stop us, really. We were looking at the gap fill yesterday. That is where I got out yesterday on the DAX, and it worked beautifully. We've got the gap fill here today. I want to put that on the chart. I think I put it on this one. Yeah. So that is the gap fill, I think, which is 16,224. Yeah, roughly there is the gap fill. So once that gap fill is done, we might find, I mean, that's such an old gap now. I doubt very much the market's going to pay any attention to it, to be honest, but it does pay attention to levels because people are watching them. So we'll see what happens. That's within ADR. Other than that, we're looking at coming all the way back up there. There's nothing to stop us until we get up to that monthly high, which is kind of the low before we broke down. So it's top of that propulsion gap. There. So loads of upside still on this DAX. If it goes down, I mean, it's just a look out below data. It's going to go with beyond ADR before it hits any support. That's your most recent support. That weekly high, that's 150 ADR to the downside. So if it does go short today, got a long way to go. But we'll see. Difficult today. I just feel like this thing needs a pullback. It really just looks like it needs a rest. All the indices do. They're all so extended. And if we're going to get a Santa rally, we need a pullback. NASDAQ undid all of its move yesterday. Completely collapsed in the New York session. S&P came back to pretty much the open, as did the Dow actually closed up a little bit, but yeah, just everything needs a rest. Really, really, really needs a rest. So we'll see what happens. Not a lot of volume coming through at the open so far, so we'll see where we go. We've got 2 minutes left on this candle. Morning, everybody. I haven't said hello to Dion, Andrew, Leshy, Michael, Rajiv, Peter, Mark, Neo. How we doing? Not a lot of volume this morning. So that is yesterday's high, which is just beyond 1R. So we will have limits triggering at the high of yesterday. And then next stop is that kind of low of that gap fill. What I've drawn in there is actually where the hell are we? $61. Yeah. So what I've actually drawn in is this low here. Yeah, the actual gap fill is all the way up there, but that's what I've drawn in. The market tends to react a lot at the low before the gap fill when you get these gap moves. So that's what I'm watching, which is just beyond 2R today. But doesn't look like it's even able to get out the highs, out the pre-market highs today so far. Are you using the 1% risk on SAH? I'm using 0.75% risk. Yeah. Which is 1.5%. So it's aggressive. But the difference between this strategy and a normal trading strategy that uses stop losses is this only takes one trade a day. So you can afford to be a little bit more aggressive. So it's equivalent to basically using 0.5% risk and having 3 attempts at trading. Yeah, I'm just using 1.5%. I'm getting in and getting out. So if the break happens, I want to be out with decent money so I don't have to bother trading the rest of the morning. Yeah. If you're going to get into 1.5% per trade and you're scalping normally with a stop loss, that's a potential for taking 3 trades and risking 4.5% of your account. That's way too aggressive, isn't it? Unless you're trading prop, obviously, which is kind of what you need to do. But so not a lot of volume here at the moment. So there's your 5-minute. So if you're not taking the pre-market range break, if you're trading with the opening range breakout EA, or you're trading SIH only on the 5-minute initial cash balance, that's your range, and you are long. Okay, so watch this. Yesterday's high. We'll see if we get a reaction at yesterday's high. US indices, NASDAQ's testing pre-market highs. Dow is approaching pre-market high as well. So all all the US indices are also hitting potential pre-market resistance. So we might get a little bit of resistance at this point. Let's see. Exactly setting the world on fire today, is it? Morning post hoc. Ergo propter hoc. I really have no idea what your name means, but it's cool. I'm probably saying something in Latin. I have no idea. Morning, Martin. So we just wait for this, just to see if this breaks this high, and then we'll go and have a look at the FX market and have a look at the RSIs. US indices are rejecting the highs at the moment, but so if we do break this level, that is the low of the gap, Bill. So I'll be watching price action here. I might well just take that one off at that level. If it flies through and just slams straight through it, that's brilliant. If not, I will probably take it off. If it seems like we're bouncing here, I'll get out. Got to break yesterday's high yet, though, which it seems to be struggling with. After this, therefore, because of this. That's what that means, is it? False assumption. Post hoc ergo propter hoc. Learned something new today. Never done Latin. I'm assuming that is Latin. I've no idea. Looks Latinish. Were you running percent risk and fixed side by side to see if there's any differences with entries at the open? No. Also, an episode of The West Wing. Never watched The West Wing. It's one of those I put The West Wing on my list to watches and never actually got around to watching it. I should do at some point. There won't be any differences at the open with percentage and fixed lot. The main difference between fixed lot and percentage risk is this range varies every day. So percentage risk gives you exactly the same monetary risk every single day, regardless of how big the range is. With fixed lot, the smaller the range, the faster you're going to hit target. But the bigger the range, the more risk is involved in a hedge. So there's not really anything wrong with either way. On screaming days, your fixed lots will probably make more money than your percentage risks will. But definitely a must watch. Yeah, I know The West Wing is. It's one of those things that's very highly rated that you've never watched. Well, for me anyway. Okay, we're through yesterday's high at the moment. We're testing it to see if we can get through. Looks good at the moment. What is the 3/4 ADR rule that was discussed on Telegram yesterday? 3/4 ADR rule. I don't know. What was the 3/4 ADR rule discussed on Telegram yesterday? I don't know about that. Well, I mean, the 3/4 ADR rule sounds to me like spacing your entries 3/4 of an ADR apart. That will be position trading. So entering your positions 3/4 of an ADR apart, which is what I use on the EA. So all my entries are a minimum of 3/4 of an ADR apart between entries, so that you don't get too exposed and you're spaced out nicely. Yeah. So in the bootcamp, I mean, there is no right or wrong with anything you do in position trading. All what you do in position trading does is it either increases or decreases the rate of drawdown. So if you get in there and you space your positions 1 ADR apart, you will take less entries and less drawdown, but your average will be further away. If you get in with half an ADR apart, you will get into more drawdown, but your average will be closer. Yeah. If you get in with 3/4 of an ADR apart, the reasoning behind 3/4 of an ADR, which is what I use, is the fact that we know that price moves within ADR 58% of the time. Yeah. So if price is going to stay within ADR 58% of the time, if you position yourself 3/4 of an ADR apart as a minimum with your trades, you will not get in on choppy days that go sideways like that. So there's no exact mathematics, because everything you do in mathematics with this is based on historical information, which isn't going to reproduce itself again. So it gives you an idea. So I've tested position trading with the Market Reverse Alerts EA, spaced out half an ADR, 3/4 of an ADR, 1 ADR, 1 1/4, 1 1/2, etc., to see what the impact is on your trades. The wider you space your entries, the less positions you will take a year. However, you will still get a similar result, as in you'll get out of those trades. It's just they take longer to play out. Half an ADR, you will get more profit, more positions a year, but much higher drawdown. So 3/4 an ADR is kind of a sweet spot. That's all. But you won't get 3/4 of an ADR. What that is saying is a minimum of. So those two entries there, between each of those is 30 pips. 1 ADR is 35. So that's more than 3/4 of an ADR, because that's where the reversal alert happens. So what the EA is doing is, when you get into a trade, is it takes a trade when there's a reversal alert. And then as price pushes down, it won't just get in at 3/4 of an ADR. It will get in when the next reversal alert triggers. And if the next reversal alert doesn't trigger until there, which is 1 1/2 ADR away, that's where your position will be. You get in when there's strength in your direction. You don't get in just because price has moved the distance. So it's just a minimum of. See, look, the difference between these two positions here. Yeah, that is 46 pips. So that's about 1 1/4 ADR between those two. So double, pretty much, the minimum that I look for. DAX is pulling back inside the opening range. So limit orders triggered at the highs. So may get hedged on this today. Again, see what happens. So we're looking for this propulsion gap to hold. So this is your initial cash balance. No, it's not. Sorry, that's just the move before the open. So we're looking for that propulsion gap, basically, to hold. So that add in some positions in there. We've got a very, very tiny gap fill, which should be very annoying if they just do that gap fill and run, because that just is a pain in the backside, because that's a hedge for no reason, really. But option you've got here is, obviously we've got a tiny gap fill, which it's debatable whether that is even a gap, to be honest. I mean, it is, but technically, if you got to there, you'd probably write the position off. But you could pull the entries down below the gap fill, which obviously widens your hedge, widens your risk. But we'll see what happens. It's not exactly setting the world on fire this morning, is it? Nice short on the FTSE, 2R and out. Great week on the FTSE, good. It's on my list to do. Look at brokers for the FTSE, but it's on my round to it list. I will get round to it at some point. This is absolutely dead this morning again. Hopefully we're not waiting for the CPI figures to come through. That would be very annoying. Yeah, lovely break this morning. So there's your open. So the pre-market break absolutely collapsed. You've collapsed out of your 5-minute opening range as well. That was yesterday's. Not quite as clean yesterday, but that was... Oof, look at that. Pre-market, you wouldn't have got hedged on that. It would have been close, but you wouldn't have. That would have been a lovely break as well. That pre-market would have been too big, so you'd have taken the 5, which broke long. That would have been a hedge that day. That day would have been a 5 break short, probably 1 and a bit R before you got hedged. Not bad though. Just a lot slower, the FTSE. So I'm gonna do some testing. I'm gonna run it on demo for a bit. I think I'm gonna get find a broker with decent spreads and run it on demo for a week or so, just to sort of eyeball it. And I'll do some screenshots as well of previous breaks so I can see what it's up to. But indices all move at the same time, so there's always an edge there. It's just you might need to slightly adjust for the FTSE, but we'll see. Do indices have an ADR since they are composite numbers? Yeah, everything has an ADR. Everything has an average daily range. Just by the fact that it moves up and down, there is a range every day. Take 10 days of it, you average it out, that is ADR. Yeah. It doesn't matter if it doesn't matter how the instrument is manufactured, whether it's a commodity, a composite, whether it's an FX pair, whether it's crypto, whatever it is, it moves an amount every day. ADR is an average of that amount. That's it. So every instrument has an ADR. All my statistics are gathered off of FX. So these percentage ranges that you see here, percentage breaks of levels, these are the percentages of FX pairs averaged out. So when I did the analysis on ADR, I analyzed every FX pair, every major FX pair, and looked at them all. They were all within 1 percentile difference. So there's one of them might have been 2.6, the other one might have been 1.7 at that level. On average, it's 2. I applied that then to gold and to something else. I mean, what it was. Might have been an index. Might have been a commodity. I can't remember what it was. But I applied it to a couple of other markets, and these percentages are virtually the same. So basically all markets have a range of movement, which you measure obviously in pips, and everybody's got different pips. All markets have a certain amount of movement per day based on who trades those markets and how they trade. Yeah. So gold will maybe move way more up and down than FX pairs, but it will move way more up and down orderly, and over 10 days we'll have an average. And on average, gold will break out a similar amount of times, 42%, as FX pairs will, because it needs a market moving event to get gold out of that range. Same with crypto. It will need a market moving event to move a crypto pair outside of its average range, and that will happen roughly 40% of the time. So somebody asked me the other day in the MQL chat system, am I going to redo all of these percentages because I only did them up to 2021? And I said, there's no point. I've done 25 years. The last 2 years, the percentages aren't going to be different. The numbers will be, but the percentage of times that it broke out is going to be roughly the same, 42%, because that's just what the market does. Market hasn't changed the way that it moves. It's changed the ranges it moves in, and it's been a little bit more rangy, but the way that it moves up and down because of profit taking within the banks and institutions, that's never going to change, because if they want to make money, they've got to do that. So those percentages aren't going to be different. You can apply them to any market. How effective they are in other markets, I've no idea because I don't trade them. But they should be as similarly effective. The only difference I would say with ADR across trending markets like gold, oil, and indices is you will probably find that when you get extended beyond ADR, you get a lot more accumulations or flags than pullbacks. So within FX, it's much more orderly in its movement because they are manipulating and profit taking. With trending instruments, you tend to get more push, flag. Yeah, so you'll probably find ADR is less effective for mean reversion. But I don't know. I don't trade them, so it's a test you'd need to run. You can use the Market Reversal Alerts EA to test that theory. This is Christmas trees today. Red, green, red, green. Up, down, up, down. We need John Wick. We ain't going anywhere. Okay, new low. By a pip. So it's a battle between the propulsion gap and the sellers at yesterday's high at the moment. Either going that or it's doing that. But at the moment, it's going nowhere. So we'll come back to that later. There's no point sitting there watching that. Probably wouldn't be hard to have an algo that keeps track of what ADR levels are being hit each day and take a percentage each week, month, year. You could do, but you'll find it'll be the same. I don't think there's any point. I tested this. Yeah. So if you go and look at the ADR video on the website, I show all the testing in that video. I show all this, all the spreadsheets. Yeah, how I calculated it all, how long I calculated it over across all the major pairs, and how many times it went over, under, etc., etc. Every year, it's virtually the same. The percentage of times that it actually moves enough to get outside of that range every year is virtually identical, because the markets have a limited amount of money that they can put into daily trading before it runs out. So you've got an amount of time each day, you've got an amount of money at your disposal, and other people have got an amount of money at their disposal. The only time you get outside of ADR is when there's an imbalance of buyers against sellers. If there's more buyers than there are sellers that day, you will move beyond ADR. And the fact that those buyers have moved price beyond ADR means that they have made more money than normal, which means they need to profit take that move. And because you've had an imbalance there, the likelihood of there being a higher balance of sellers the following days is high, which pushes price back down again. It's all buyers and sellers. But banks and institutions have desks. Each desk has a person on it. Each person has a portfolio, an amount of money that they can put into the market. That doesn't change. Yeah. If I'm sitting on Barclays' desk with a 25 million portfolio able to be manipulated by me that day, I can move it by 25 million. That's it. all the other banks have got the same amount of money, which is why you have average daily movement, average daily ranges, because there is a finite amount of money put through these markets every day. So unless that changes, you're not going to find, and even if that does change, if suddenly that amount of money is not $7 trillion a day, it's $25 trillion a day, what's going to happen? The ranges will get bigger. But will the average daily range breaks change? No, because all that's happening is there's more money, therefore the ranges get wider. That's it. The amount of times it goes in and out of those levels is just normal. It's every year it's the same. It's just the same. Fundamental shifting will make that happen more or less. But that's all. And those fundamentals will unshift at some point and it'll all go back to normal. Just market movement, market cycles. Oh, it's just painful today, this DAX. I don't want to be in this today. It's going to be one of those 2R days today. We'll be lucky to get a 2R, I think. We'll give it till 10 and see if they're waiting for the CPI figures for Eurozone. They should know what they are. The forecasts are probably going to be negative. So, don't know. We'll see. Right, so there's no ADRs today. We'll look at the weeklies and see if there's any opportunities. It is Friday. So obviously, Aussie New Zealand has hit weekly range to the downside, which happened pretty much in 24 hours, or in about 8 hours, actually. So there is obviously a mean reversion opportunity there. That's extended 125% of its weekly range. CAD Yen is extended beyond its weekly range as well, but only just. So we're on Thursday, Wednesday, Tuesday, Monday. So it's there, down to there. It's been fairly orderly, the market structure on this. There's no stretching going on here, is there really? So potentially that could continue to go, but that propulsion gap would be a potential target to the upside. We've got this one as well here where they added shorts. We've got Euro Swiss. We know that's massively extended at the moment. So this is a good looking long opportunity, but we're coming out of an accumulation for like a week. So this area here is probably what I would look at as a potential upside resistance. So 175 ADR. So you could take a long on this at any point today and target that area. So good amount of movement. You've got 175% of its average daily range to the upside, 57 pips. So drop down, wait for a reversal alert. It's quite a way away at the moment. So it'd be good to get a new low put in, and then you're going to get your reversal alert there, which would be a nice tight W. I've got one on already. 38. 27. I'd struggle to get a second position on that. But that one is nicely extended. Euro Swiss. Euro Yen also extended to the downside. These yens obviously are powering up. Euro's dropping at the moment. So all of these yens potentially are good looking long opportunities, but not too sure on what's going on with the yen at the moment. Euro New Zealand, again, same thing. Double bottom there happening at yesterday's low. Gap fill. Whether that is a gap or not, I don't know. But you've got that low there. So this propulsion gap, basically, accumulation break, that would be a target to the upside. Back up to there. New Zealand, US. Look at it. Just algorithmic this morning. Just the algos playing with each other. No, there's nobody trading this morning. New Zealand, US, you kind of missed it. It was yesterday. And US dollar yen. We know the US dollar is very weak at the moment. So that one started to pull back yesterday. Not a very clean level at all for a pullback. We got the bounce there, and then it broke through. Then it pushed back up, gave you a reversal alert. Now it's pushed back down below that level. It's just unsure, isn't it, in a minute? Everybody's unsure on the yen at the moment because we're getting mixed messages out of them to do with interest rate rises, which is the first time in 6-7 years they would have done that. Everybody's got mixed messages with the US dollar at the moment because we keep getting told they are going to increase rates. Then we're going to get told they're going to reduce rates. Then we're saying that there's going to be a soft landing. There's not going to be a soft landing. Inflation's coming down at a good rate. Actually, it's not quite as good as we thought it was. They're just mixed messages all over the place at the moment. This US dollar has no clue which way it's going. No one does. So this could go either way, which is why I'm kind of staying out of the yens at the moment, because if that US is going to drop, and we need some news to confirm it, but if that US is going to continue to drop, we'll probably get some strength coming through on the yen, which means you only want to be shorting everything against the yen. So euro yen 125, speaking of the yen, there we go. That euro continuing to drop off today. Nice big drop on the euro. That should help my Swiss positions. Yeah. Oil still holding that CAD down. So there's your weeklies. RSIs at the moment, the obvious standout contender for a long, Euro Swiss. So massively extended on the hourly, massively extended on the 4 hourly. These 80 RSI, 80-20 RSI extensions are kind of bread and butter for longs and shorts. Not so good on Euro Swiss, actually. Looking at them, normally you get much bigger moves off of them, but either way, that's going to pull back at some point. So looking at potential support resistance areas on this one, obviously we've got that high there, which is these lows. We've got that area there, which is that low. So somewhere in this zone, 150 ADR down to roughly 200 ADR. If we can get a push down to there today, that'll be a spot on place for a long. You're going to profit take on that break. So it could come all the way back up to there or up to there. Loads of upside room. So we've got this propulsion move here. Now, this isn't a great propulsion gap because it's actually just a V shape. It's not an accumulation break, which is a good propulsion gap. So that's not a great propulsion gap. I would be much more interested in a move down to zone, be easier. Somewhere down to that area there. That would be my preferred long, somewhere out of sort of 140 to 180 ADR. So if we can get an ADR hit to the downside on that today, lovely looking long opportunity. I'll be taking a second position down there if we can get down there. So that is massively extended across all time frames. Hourly is embedded below the 20 level. So yeah, but obviously the euro is really dropping. Bear in mind, if we get these CPI estimates coming out at 10 this morning, if they come out as negatives, it's only going further. So it'd be good to get negative numbers on this because that will help drive that down to 150 ADR. If we can get to 150 ADR, that'd be a lovely long. Do you know what? I've seen so many days like this, and you just sit through it for an hour and a half, and you get somewhere like that or somewhere like that, and you literally haven't gone anywhere, and it's such a small amount of money for such a high amount of work. I think if we can get a push back up, I might just take this off with $100 or something this morning. If we can get a push back up into here, maybe I might just get out. This is not going anywhere. The opening range breakout strategy is a breakout of the opening range. This isn't open yet, so I'm not really interested in it. There's no volume today. It will go somewhere today, but it's not going to go anywhere with any volume that is going to make life easy. So I might close this out because it's just not going anywhere. As soon as I close it out, it will rally about 200 ADR. You watch. But there's no point in sitting in a hedge on this today for 2 hours. It's just going to make life a pain in the arse. I'll see if we break that high. If we break and close that high, It can't even do that. Look, just asking for that. I just don't want to sit in this and manage this all morning. I've got other stuff I want to do. You can't make money when the market's like this. Oh my God. It's not even going to give me an exit, is it? I'll come back to that in a minute. Euro pound is also extended to the downside. The pound isn't particularly strong at the moment. Obviously, we know that the euro is weakening. So this has got further to go today. So on the hourly, we're just about to get an RSI extension. This is one of those pairs that is very push and pulley. It goes up and down all over the place all the time. So very rare that I get a trade on it. It's not often you get entries on this. So it's coming down to a very nice monthly level here. Yeah. So this area here is our previous support resistance zone at the moment, which is a great level. It's extended on the 4 hour, nicely below that 80-20 level. So looking for a pullback out of there. Yeah. So looking good. 80-20 is the awesomest level on RSI there is on the 4 hour. So we're nicely down there. Beautiful pullback. This entire leg here, or potentially that entire move there for the last 2 weeks, is due a pullback. So you'd be looking at a pullback at least on that 30, 50, 61.8, that propulsion gap, or potentially you could be looking at a much bigger pullback on it. But we're going to need a little bit of news on the euro or the pound to give this just a kick back in the opposite direction. So, but nicely extended on the 4 hour. So that's above below the 25 level. That's about to trigger you below 20. So that's about to light up on the next 4 hour candle close. We got Euro Yen and Euro New Zealand. Again, all these just dropping on this Euro news that they might be bringing the interest rates down. So we might get a continued drop on it, but all extended, all good potential mean reversion opportunities. Yeah. So that move, looking for something to pull back. We've got New Zealand US, which is off the back of the New Zealand news, and that's not the wrong pair. New Zealand US, which is extended off the back of that New Zealand interest rate, which kind of undid. Nice 3-bar reversal there, but we haven't gone anywhere so far today. So this whole leg here, we then broke out of it. So that entire move, everybody long from here is waiting to get out. So it could be that this is just flagging, but you've kind of missed it. You needed to be in that one yesterday. And US dollar Swiss. So this is the one I've just taken an aggressive drawdown control position on. Please don't hedge me this morning. I really can't be bothered to deal with that this morning. It's going to. It's like pulling teeth. Awful. There we go. So we are starting to pull back on this now. So that's extended again below that 20 level. We didn't get the pullback there. We got the accumulation. So this is what I was kind of saying earlier about trending pairs. When pairs are trending and you've had a fundamental shift, what you tend to get is an accumulation and then continuation. The Dow has just made a new pre-market low. This isn't good. The US indices are melting. The DAX is going to hedge. So all the US indices dropping, which will bring the DAX down. So get a hedge on the DAX. I'll have a look at targets on that in a minute. So yeah, this whole move, there's 2 moves here. There's obviously the CPI move and then the continuation after the CPI move. So that hasn't profit taken really yet. So we're looking for a pullback on this, possibly looking for a pullback on that entire move. So this is your accumulation break. So this is kind of the resistance to the upside I was expect us to get to. If you look at it on the hourly, there's tons of accumulation in here, and that's a support, resistance. That's a support, resistance. Yeah, and we've got a little one there as well. So that propulsion gap should easily be achievable to retest. That would be a flag on the 4-hour move. Any kind of pullback, you're going to find people selling out of here and people selling out of here. So it's going to be quite tough to get through those levels. So this is one of the reasons I've taken an aggressive position on this. I haven't got a lot on it. I've got 5 on. Sorry, 6. 5. Yeah, that's my aggressive. But I've got quite a lot of exposure on the Swiss franc with the CAD Swiss. The CAD Swiss and the US Swiss obviously are very much the same pair because the US dollar and the Canadian dollar move in sync. And I've got CAD Swiss long and US Swiss long. So basically, I've got double exposure on US stroke CAD Swiss. So I just want to try and get out of some of this and do some drawdown control, which is why I've taken that one there. So I'm looking initially for a push up into that propulsion gap. It's 200 ADR away. It's not going to hit it today unless we get massively positive unemployment numbers for the US, which is unlikely. Euro US dollar ADR, so that's euro dropping. Hedged on the DAX. You can feel the disappointment in my voice. I've just sat through that for 45 minutes just to get hedged on it. I knew it wasn't going anywhere. I just couldn't get that exit. So looking for a push up on that one. That's a 4-hour RSI extension. So again, it's the second extension below the 20 level. So very nice divergence, bullish. We need a news catalyst. So we've just had the euro potentially announcing lower interest rates faster, which is going to be negative euro. Swiss and euro move together, so that's negative Swiss, which is good. So if we can get some positive news this afternoon on the Canadian and the US in the form of higher than expected GDP numbers and unemployment claims dropping, that's going to help rally that up. So there is a good chance of getting an ADR on this. Also, it's the last day of the month. So we quite often will have a lot of banks and institutions reaching for levels on the last day of the month to try and balance the books, get the profit in the bank so they can report on it and get paid on it. Because they do monthly and quarterly reporting for stockholders, obviously, and that's how they get paid. So we quite often get decent ADR days towards the end of the month. So there's lots of opportunities today. And US dollar yen is extended on the 4-hour as well, but that is already been extended. So this is, again, a nice divergence. Yeah, that's bullish divergence. However, that yen quite possibly starting to power up. So it's a tricky long. We will see. Euro CAD. Haven't touched that one yet. So I'm short Euro CAD in profit. Just on my way to TP. Might extend TP on that actually because we've just had negative euro news and we could have good CAD GDP numbers this afternoon. So my target at the moment is here. This is the most likely support, which is 175 ADR today. That is a potential double bottom. So that's why I've targeted that, because that comes before that. And I'm obviously not. We were talking about yesterday in the I think it was in the New York session yesterday about how trading is about how big your balls are, basically. So my balls, someone else's balls. Yeah. The bigger the balls, the further away your target is. It all depends on how your monthly, week, and everything's going. But there's a good chance of a bounce there. If that one doesn't work, then that one probably will. So we've had negative news. We could have positive. We could have negative there, which is going to drive that back up. So if it can get down to there, and then that CAD GDP number drops, that's going to pop. You know, this is the impossible decision, isn't it? Nobody knows which way that's going to go and where it's going to bounce from. You have to make a decision. My decision is that makes me a decent amount of money that I'd be happy to put in the bank. Everybody's decision is going to be different. FTSE, not very happy today. No, that's really collapsing. Inflation rate also comes today. Inflation rate. Euro you're talking about? Well, that's not the inflation number. That's an estimate for year on year, which is the reason that is orange is because we know what it is. We've had all the CPI figures already. So it's kind of an estimation of, it's just not a figure that they pay a lot of attention to. Sometimes they do. It needs to come out. If you look at the numbers, you will find with this one, it's very often within 2 to 3 percentile. Yeah, it's most of the time it's as expected. 0.1 out, 0.1 out, 0.2 out, as expected, 0.3, 0.1, 0.1, as expected, 0.2. You don't get a lot of deviation from forecast because we kind of know what it is because the figures have been released. So it's not really in a particularly impactful one. However, the market will move on news. So it uses news because at news you have liquidity. To move the market, you need liquidity. Therefore, you get movement on news. So sometimes orange news will move the market dramatically, not because the news is impactive to the currency, but because the banks and institutions use that time to drive the market where they want it to go. So it's hit and miss. This is why orange news is there. We need to be aware of it. And when something suddenly goes flying, you go, right, they use the news to do that, or not. You just need to be aware, basically. But we will see. Just curious, can you look at how long it took your DAX trade to get on this morning? Mine was 551.8 milliseconds. You can't improve your execution speed. It's nothing to do with you. It's to do with the bank. It's to do with your broker. My execution speed. Uh, 515 milliseconds, 375 milliseconds, 266 milliseconds, 922 milliseconds on the DAX there. 1015 milliseconds. Yeah. All this is doing is reporting how long it took your broker to respond. Nothing you can do about it. So looking at the DAX while we're on it, I kind of was hoping we were going to break long today. The difficulty with the downside break is we've got this whole move yesterday as a potential target to retrace into. We could go into rotation and just muck about like this today. We've got multiple levels here that we could select as potential support bouncers. And if we break that level, we've got clear air basically until we get into this propulsion gap, which is way beyond ADR. So it's a very difficult downside target to select today. Obviously, if we're going to start a pullback in this market, we could be down here later. It's very hard. The US indices are really dropping. No news coming out. So, yeah, tricky one to the downside today. 4.5 hour, somewhere around 4 hour is probably the most logical place. Yesterday's low, obviously, is kind of 300 ADR. It's 225 ADR. Miles away, absolutely miles away. We're not getting down there unless something dramatic happens today. So I would look at that area there potentially to get out of my shorts and then get an aggressive position on. We're almost at ADR there as well. So if we can rally all the way down to there really quickly without stopping, we're going to get a lovely little pullback on that. Exactly like we did yesterday. Rally all the way up there. There's your flag break. Yeah, so you get out on the flag. So hopefully that will just drop and just fall through the earth. That'd be lovely. But you've got multiple levels you can look at. So you can look at that as well. 3R, roughly. We've got where we are here at 1R. It could just do that. It's a mess today, and there's no volume. So hopefully this is the start of a move, and we do get some traction today. But at the minute, it's a mess. Upside, no idea. Upside is upside's miles away, isn't it? On the DAX. We're 300 ADR. You know, it's all the way up there. That gap fill. I suppose the gap fill, but that was only 2R, wasn't it? Upside. It's just not good today. Just no volume. It's more likely to come and pull back, I think, today into that weekly high, which is 150 ADR. We had a whacking great day yesterday, so we might get a whacking great pullback today. Probably going to be a hedge. Money making opportunity, hopefully this afternoon. How's your month looking? 9-10% so far. 11. I'll bank some more today as well. So probably do 12 or 13 this month. What did I do last month? 21.7. Much better last month. September was the lost month. That was a nightmare. Hey, look, September. I was on CAD Swiss. I was short on CAD Swiss in September. And now I'm stuck long on CAD Swiss in November. So I was short on that move in September, and now I'm long on the retracement, which we haven't had because it didn't do it. We'll get out. That's going nicely, the Swiss at the moment, dropping very nicely. FTSE FTSE's not very happy today. So yeah, that's all I got for you this morning. Just going to watch this morning. I'm going to let this run down to 4R. I'll watch price action there. The reason I'm not particularly interested in this level as much is because it is a kind of a double bottom there with that accumulation, but it's not very much of a resistance. It is, if you draw a line on this level, it is a decent price point. So we hit it, we bounced off of this level, we finally broke through it, we bounced off of it, we came back, we bounced off of it, we broke through it again, we bounced off of it, we came back, we bounced off of it. So it is a very strong support resistance, but it's a strong support and resistance after a massive rally, which may or may not be of any relevance now. So I think this is less important than that, because that was the flag break where the buyers that made that move stepped in and added to their positions. So that is a stronger buy level for me than that one. But price will bounce at all levels. It's how big the bounces are and whether you can get out of them is the question, isn't it? But first of all, we've got to get to one of these levels. So I will watch this level, but I'm much more interested in that. The way this is going at the moment, we may not even get there by New York. So it's crap today. Every Swissy position seems to be longer than we'd like. The Swiss does that. Don't forget, the Swiss is a safe haven currency, and it pushes and rallies for days on end when it does. It's very, very, very strong. You put your money in the Swissy when you need it safe. If you look at the fundamentals for the Swiss, their interest rates are very low. Their inflation is below target. Their unemployment is virtually nothing. If you want to put your money somewhere that is going to be safe and stable, you put it in the Swissy. So whenever we have times of crisis, times of trouble, you're unsure about investments in other instruments like commodities, oil, other FX markets like the yen and the US. Not sure what's going on with either of those at the moment. We'll stick it in the Swissy for the minute. We're going to get a decent return, and it's stable. They're not going to muck about. They don't change interest rates very often. Their inflation is as stable as anything in the world, and their economy is great. You stick it there. That's why you get these prolonged runs into and out of the Swiss franc. So when we go into swings on fear and greed, where the hell's fear and greed gone? So when you go from swings into fear and greed, that tends to push and pull the Swiss franc. We were sitting down here for a long time over a 2-month period, and we've gradually moved over here, which has powered up the franc. So what we need is Hezbollah to get involved in the Middle East conflict, or something like that. You know, you need something to shift, or the euro to drop, which is happening at the moment. So if the euro drops, that will drag the Swiss franc down with it, and the Swiss franc coming down will obviously again be a sustained move in the other direction. A lot of people don't trade the Swiss franc for the same reason they don't trade the yen. It's one of those, the Swiss franc and the yen are both safe haven currencies that are, when they get going, they just get going, and they don't tend to stop very much, which is why a lot of people don't like to trade them. They're great for intraday moves. If you catch an intraday move like yesterday, yeah, you'll make a fortune. Yesterday we got 150 ADR roughly on the CAD Swiss. Euro Swiss, look at it, it's just huge. Second entry taken on Euro Swiss. So second long on there, average down to there. So nice, easy exit. I need to put some TPs on this, don't I? Not going to get that today, but safer. So that's a nice, easy target underneath that weekly low. So it's either going to come and retest that level, or it's going to come and retest this propulsion gap, which is this level. This is a much, 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 much stronger level, as you can see. We've tested this loads of times. This level. That's only been tested once, so that's going to be weaker. But easy to achieve, quick, in, out, done. Okay, DAX is thinking about going short. It was thinking about going short. Just as I said that, it popped. I was saying, like, DAX is thinking about going short. The candle was down here, yeah? And I said, DAX looks like it's thinking about going short, and it just went and popped up into a hammer. So you got a double bottom just formed. Not going anywhere, is it? So we'll wait and see. We'll have a look at that later. I'll update in the Telegram group. If it moves and it gets anywhere that looks interesting, I'll update in the Telegram group. But it's stuck, isn't it, today? So we just have to take it on the chin this morning, I think, and concentrate on this afternoon. So I'll be back this afternoon, 2:20. And we'll see how we get on with the US session. Just be aware of news today. All the news is happening pre-market today, pre-market open. So we've got OPEC meetings all day, which will affect the CAD and oil. We've got the GDP for the CAD at 1:30, which is also released at the same time as the unemployment claims. So big volatility on CAD and US at 1:30 this afternoon. And then obviously market opens, and then we've got the PMI figures coming out So I'm hoping that they don't hang around for that and they just move. But we'll see. Excuse me. If we get massive movement off of these CAD and US figures this afternoon, and we've hit ADRs on the indices, that might also be a reason to be careful with the indices, because once we've done all our volume and volatility pre-market, we quite often get quite a choppy open that doesn't go anywhere in the US session. So we'll see where we've gone with these numbers and see if the indices have had a big reaction. They're all buying up again. Look, all the US indices, DAX is buying up inside the range. NASDAQ's buying back up. S&P, Dow. It's rotation today at the moment. We're either waiting for something or we're literally just not interested today. We've done it all yesterday. So don't forget, we're coming out of a period of multiple days of just nonsense price action. Yesterday was our first real, like, oh, look, we're back to life again after 5 days of sideways crap. So we could well go into 5 days of sideways crap again. We'll see, but I think we can do about it. Right, I'll be back this afternoon, 2:20. If not, I'll be back tomorrow morning, 7:50, same time for the Frankfurt session. If you need anything, I'll be in Telegram. I'll update on this if it goes anywhere. And yeah, hopefully you have a good morning. I will see you guys in the next one. Have a good day.